Hello everyone. Today we are going to talk about the model performance dashboard. In credit risk series, we are going through end to end what is credit risk, how you can get a job in credit risk, what are the overall models which are getting used like PD, LGD, EAD, then we spoke about IFRS 9, then we spoke about Basel, everything in detail. If you're on my channel very first time, you seeing this video as a first video, please go explore those videos. Those are very helpful and very valuable. Now in today's video, I'm going to talk about the model performance dashboard that will talk about all the banking models overall when you are running any of the retail models or you're running any wholesale model on any of the products like credit card, loan, mortgages, home lending portfolios. So this video is going to be a game changer for all those people who want to learn model monitoring. Model monitoring is a very high paying job in the industry, in the banking sector. You use many coding languages, Python, SAS, R, but this is the concept which remains the same. So be with me. Please be with me till the end of this video. You are going to learn a lot. Okay. Now let's move forward. Let's start talking. So as many of you can see on my screen that the topic is going to be model performance monitoring dashboard. Okay. Now I have prepared a dashboard, how actually the real dashboard looks like. Okay, and then we will talk about the nitty-gritty of that. So in this dashboard, for now, you just remember that we are talking about the quantitative trigger names, which is MAE. Okay, what is MAE? I'm going to explain you in a minute. And then number of consecutive quarters for which 95% CI has been in last quarter. Now you'll ask about CI, so I'll talk about this also in the same video. So you just understand these are the two metrics. Number one metrics, number two metrics. In these metrics, you have a grid structure, like you have ranges, right? If your model is having a value of less than 0.3, that is in green value. If your dashboard is having value less than 0.3, between 0.6, then that is a yellow or dark green. And if your value is greater than 0.6, that is red. Before you understand this is something very important to understand the traffic lights. Okay, traffic lights are very important in model development life cycle because green tells you that your model is good, amber or yellow or orange tells you that your model might need to be it needs some repair or there are some parameters which are not working fine, and then red talks that your model need to be expire. Okay, now for the second one, which is about the consecutive quarters, and then CI, this is the CI specifically. So if CI is less than 2, then your model is in green. Otherwise, if it goes to close to the range of 3, then that can be red or amber. Okay. Now we'll come back to this picture because this picture is the whole and soul of today's video. But let me give you a brief. Okay. So I prepared the stuff already so that you can take a notes. There are two things. Number one is your quantitative triggers. Okay, that is your MAE. Then you have the threshold mapping, number two. So in MAE, in the quantitative triggers, the number one matrix is MAE. Obviously, that is your mean absolute error. What is the meaning of mean absolute error? How much prediction value is deviated from the actual value. So let's say I ask somebody, what is my age? Somebody tells me you look like 29. I say my age is 28. So that one is the gap, right? So that is known as the MAE error. So the MAE will be 1 in that case. Now, the same definition is here. How much predicted value is deviated from the actual value is known as MAE. That is a very important measures in the performance of a model in any banking cycle. Okay, then let's say I predicted my friend's monthly salary for 4 months. Like the 4 month, the salary can be actual salary. Okay, is like this value. And then I predicted something like this. So what we'll do, we'll take the difference of each of them. So the difference comes 50, 100, 100 and again 50. Now I'll take the sum of this. Now I'll calculate the average. Obviously I'm taking the sum. Okay, then dividing by 4. So here it's come 75. This is the value of MAE. Now, MAE is very important, okay? But so the condition here is that if MAE is very less. Okay, the less the MAE, that means your prediction was obviously good. Why? Because the accuracy of your prediction was that much, right? So if you see here, if MA is low, like 0.3, 0.5, 0.6, then that means that the model performance prediction is going very good and predicting customer behavior very accurately. So here the catch is that very accurate. When you will work in any of the MNC or any of the bank, we usually work on the value of such kind of value. Like for example, when we are talking about, it's very accurate, so you will report to your client or your manager that the model is very accurate at the moment and MAE value is close to negligible. That is number one. Then in the photo, the second thing was CI. So what is CI? Let's talk about that. So number of consecutive quarters with 95% CI breach. Now what is CI? CI stands for confidence interval. Okay, that 95% confidence interval equal to the safe zone. It's a safe zone for a model when we are validating a model. So MAE is good, so we can give a go ahead to MAE that MAE seems to be in sync and model performance is good. Now when you talk about the confidence interval, so the good confidence interval is considered close to 95%. The safe zone where we expected the model performance to fall most of the time as a model developer. That's what we predict. That's what we want. If we want to make our life easy, this is the value we are looking for. The confidence interval should be equal to 95% or more than 95%. Okay. A stability matrix tracking how often model performance statistically deviated from 95%. Okay, if a model keeps breaching the safe zone, which is your 95% quarterly. Okay, so what is a quarter? 3 months, Jan, Feb, March is a quarter. So quarter on quarter, it means that it is becoming unstable and may not be trusted anymore. So now you understand, right, that your model's confidence interval is changing every quarter. That means your model is not good enough maybe for prediction now. Okay, these were the two matrices. So MAE and confidence interval, that was the theory behind the overall logic. Now let's talk about the threshold mapping. Usually in the industry, how they are using it. So in industry, threshold usually talks about that for any particular value, what is a maximum digit or maximum value we can assume for that particular interval. Okay, now each trigger is divided into performance band. What is performance band? Performance band actually talks about the coloring part. Now if MAE have a value range less than or equal to 0.3, that is considered as green. Then greater than 0.3 but less than equal to 0.6, it's considered yellow. And if it's greater than 0.6, it's considered red. It can change from company to company. It's a generic standard in market, right? It can be like 0.3. Some company can say it can be 0.5. Some will say it can become 0.7. So totally depends on the bank. Now let's move forward. I think the coloring part is pretty easy. Okay, we should not spend much time on it. Now the current situation, since the out of sample means what? Whenever we prepare a data for the model, we create three things. One is your training data, where you are training your model. Second is your test data. Then third is your out of sample data. Now what are these three? I have said in previous so many videos, but let me quickly give you a background. When I'm creating a model, let's say on regression, so 70% usually is my training data out of 100%. Let's say I took the data of March 2025. In this table, in this data, I had 100 observations. So 100 observation, I divided 70 in training phase, then rest of 30 in testing phase. Now you will obviously think, what is out of sample? So out of sample will be April data. Now this apparel data I will pass in out of sample. So that is out of sample when you are testing the model. Obviously you can do the testing of the model when you are using out of sample data, because that data has not been touched by your code. So your code will not be able to manipulate the result, and you will get to understand whether your output is unbiased or not. Okay. Since the out of sample MAE is 0.029%, the trigger status seems to be green. That means that model performance is very accurate. So you can tell it to your stakeholder, your client, that model performance is green in this case. Now, from the consecutive quarter of 95% confidence interval, okay, now the breach count in 4-quarter status, let's say if it's less than 2 quarters, that's a green. If it's equal to 2 quarter, then it's a yellow status. That means that the breach is happening for 2 quarter. Then if the breach is happening for more than 3 quarter, which is 9 months, that means your model is an unstable model. This is the case, we need to raise a red flag that your model is not working good, sir. So you need to change your model. In current situation, when I was talking about this one, okay, so all these concepts apply. Now the summary of this will be that both the key indicators here in this particular image which I actually generated, that MAE and confidence interval breaches are in green status. So this is the core here. That means that the model predictions are highly accurate and it is statistically stable over a period of time. Now let's go back to the image. Now you should be able to relate everything. Okay. If you see the colors, on the basis of color only you will be able to understand. See, the trigger status is, this is the whole soul of this video. You need to keep a focus of the trigger status. That's how usually these triggers are created. So you will do a coding in, let's say, Excel, or you will do a coding in, let's say, Python. You will generate these colors as a model developer. Now both are green. MAE is green and confidence interval is green. Okay, so since the out of time MAE is 0.2, the trigger status is green. I'm assuming that, and the number of consecutive breaches is 0, the trigger stands green. That means your model is highly stable. So this is what you will do in your presentation. You will show this to your clients. If you are a model developer, if you are working for your own company, you will tell it to your stakeholder. So you will take whole this presentation which I created here. You will show it to your clients, your stakeholder, your manager, and you will take a whole presentation just like the way I did. So that is the job of a model developer. Sometime on IC role, individual role, you will not get a model developer. Okay. Sometime this work, presentation work, is done by the model development team manager. They will show it to the clients. And if the status is green, you don't need to be worried. But if your status is, yes, let's say, yellow, so you need to re-invigilate your model. Okay, and you need to check the inputs, everything, and then talk to your stakeholder that this model might need some work. And if your model is red, then you need to collect all the evidences and you need to present those evidences to your stakeholder, your senior, and you need to tell them that this model might need to be repaired. Usually in those conversations, all the big teams are involved. Okay, when you are taking such decisions, I'm telling you industry standard now. Okay, when we are talking about all these traffic lights, so usually model development team is part of this. Model validation is also part of this. Model owners, who are the big shots in the bank, they are part of this. And also model model developer, model validation, model owner, and model monitoring. So these four are the main meeting people who would be taking all the decisions. On that note, if you like this video, please hit the like button. please make sure you subscribe to my YouTube channel. I try to make more and more valuable content for all of you, but if you find that you have still any gap, any question, concern, please put it in the comment section. I reply to each and every question. So on that note, I would request again to subscribe my channel, and would like to thank all of you who are coming back and back and asking such relevant questions. I usually see that, and I reply to all the questions. On that note, I would like to take leave from all of you. Thank you so much. I'll see you in the next video. All the best, guys.